Will Bitcoin flip gold this cycle? Today we're talking about why Bitcoin OG and permable Adam Back seems to think this is not only possible, but likely. With both gold and Bitcoin rallying hard to start the week, we're putting the world's hardest monies head to head. We'll explore why the imminent ETF approvals and the upcoming supply halving reveal bullish predictions for Bitcoin when compared to gold. Is 700k Bitcoin on the horizon? Gather round, boltards. It's time to sharpen our horns. What's up YouTube, I'm Hurley, and today we're talking about the real flippening. As Bitcoiners, we all believe that Bitcoin flipping gold is inevitable, but the timing is still up for debate. Could the historical performance of gold after its ETF approval be a sign of things to come in Bitcoin? More on that in a second. First, speaking of bullish, has anyone seen the parabolic rise in hash rate lately? Marathon Digital Holdings, which is traded on the NASDAQ under the ticker symbol MARA, is the largest and most technologically advanced publicly traded Bitcoin miner, as well as one of the most energy efficient. They are also the second largest holders of Bitcoin among publicly traded companies in North America. Marathon's mission is to enhance the Bitcoin network by sustainably increasing the amount of computational power, or hash rate, that helps make Bitcoin the world's most decentralized and secure monetary network. Okay, back to Bitcoin versus gold. Mega Bitcoin OG Adam Back, who has the esteemed honor of being cited in the Bitcoin white paper, recently tweeted that he believes Bitcoin will probably flip gold this cycle. Here's his full tweet. He says, "Digital gold Bitcoin will surely flip physical gold sooner or later, and probably this halving cycle. So within a year or two. Currently it would take $700,000 per Bitcoin, but it may be partially a substitute. Some people start selling gold to buy Bitcoin, crossing the market caps below that." Back is referring to the flip potentially happening below 700k per Bitcoin due to gold losing its monetary premium to Bitcoin in the coming months and years as the world begins to see it as a preferable store of value. Both gold and Bitcoin started off the week very strong, with gold wicking just above its all-time high before a hefty correction, while Bitcoin continued its steady climb up all year, surpassing 42k yesterday. It's important to note that although gold reached its all-time high in numerical dollars, when you adjust for inflation, it's still well below its all-time high set in the early 80s, as this chart posted by Joe Calisare shows. I also love to look at Bitcoin priced in gold and gold priced in Bitcoin as a more clear representation of how these two hard monies are performing head-to-head. Here's Bitcoin priced in ounces of gold since its all-time high set in late 2022. Take a look at this chart from Wicked that shows 1 ounce of gold priced in Satoshis, the smallest denomination of Bitcoin. 1 ounce of gold is currently around 4.5 million sats, down 55% this year alone. I also just love this graphic posted by Michael Saylor showing Bitcoin versus gold returns as of August 2020 when MicroStrategy began implementing their Bitcoin strategy. Keep in mind this was calculated before the recent price moves. Now that big rise in gold's value we saw in the early 80s was fairly short-lived as it came down and went sideways for decades afterward. That is, until the world's first commodity ETF, the SPDR Gold Trust, began trading in November of 2004. After it launched, gold went on an 8-year rally with not a single down year from 2005 to 2012. With the Bitcoin ETF approvals imminent, does this signal a similar multi-year rally for Bitcoin? I'd argue it does, but instead of an 8-year rally like gold saw, we may be looking at an infinite rally. And I say this because of the supply and demand dynamics of Bitcoin, something we've covered on this channel a lot. Cue the upcoming Bitcoin halving. In April 2024, the Bitcoin supply will be cut in half, which is something that programmatically occurs roughly every 4 years, or more precisely every 210,000 blocks. This fourth halving in Bitcoin's history is particularly noteworthy, as it will bring Bitcoin's supply inflation to below 1%. This will officially bring Bitcoin's stock-to-flow ratio higher than that of gold, which is a huge deal. Gold supply increases on average 1.5 to 2% per year due to global mining efforts. This next halving will officially make Bitcoin the hardest money in the world. This inelasticity in Bitcoin's supply is revolutionary, as nothing like this has ever existed before. When the gold price goes up, you can expect its supply to increase as mining becomes more profitable. When the Bitcoin price goes up, you simply can't mine more Bitcoin.
So, question about the halving. I've heard it called the halvening or the halving, but either one. We're getting to that in April, I think, right? Yep. And that's been a bullish thing before. I sort of wonder, is it the same thing, though? Is that already getting priced in, or is there something technical that actually happens that would make it be priced in closer to the event?
So what we've seen historically is that the 12 to 16 months after a halving is the best performance of Bitcoin. So that's what everybody's thinking about. This time, this time might be different because the price of Bitcoin's higher. We now only have, I think it's 900 Bitcoin a day that come out, so that gets cut in half. It's not a lot of Bitcoin, but what it does do is it makes Bitcoin more scarce than gold. So for the first time in history, you have an asset that is more scarce than gold.
In what way more scarce?
Let's call it a stock-to-flow ratio. So the amount of Bitcoin mined every year divided by the amount outstanding, same with gold. And now there'll be, quote-unquote, less Bitcoin than gold mined on a relative basis.
It's important to note that this inelasticity in supply also affects the price on the way down. When there are more sellers, the inflation rate doesn't drop down to meet lowering demand. Just another example of why Bitcoin priced in US dollars is so volatile during these early stages of its monetization. The world markets are still coming to terms with its absolute finality of supply and its programmatically set issuance. So will Bitcoin flip gold's market cap this cycle? It's definitely possible, and the confluence of events that we see in front of us just might make it probable. Let's end on this excellent tweet by Preston Pish. He says, "Tons of people are going to disagree with this, and that's okay. That's what makes a market. And this comment isn't directed at any person, but the idea. I think the biggest threat to gold's monetary premium is Bitcoin. People will say, but Preston, why bash gold? It's a store of value just like Bitcoin. We're on the same team. So I'm sorry, not sorry, but I'm not on the same team. Here's my point of view. Gold has saved countless individuals throughout time immemorial. It has saved them when governments have ruined the local paper currency, and it provided a way for those individuals to store their buying power until the next saleable paper money could be established and pre-existing loans denominated in the previous currency go to zero and the system got reset. But that same gold from a sovereign standpoint sits at the gateway of why people incorrectly think a sound paper currency could be stood up on top of the government's gold treasury. Therefore, this perpetual illustrious loop of gold providing a peg when human nature ensures the peg will fail, is mixed into the root cause of human suffering and paper debt jubilees. There is no guarantee that Bitcoin will be successful. I understand that gold is a backup plan for many people in the event that Bitcoin fails. I'm not discouraging people from protecting themselves from potential pain and suffering, but based on what I think I know about Bitcoin, I think it evaporates the monetary premium humans have put on gold over time. I think a vote towards gold is simply an insurance premium on Bitcoin's demise. Therefore, if you own gold, you might want to start performing the actual science of what that policy is worth. I personally place a very small percentage of probability on that outcome. Definitely doesn't mean I'm right. So when you see me bagging on gold, it's not because I'm trying to poke people in the eye that still like gold. I simply find it to be a vote for more of the same. A vote for more cycles of human suffering, even though I know it protects individuals personally. I've lived in some really shitty places for years of my life. I can do it again. In fact, I would rather do it again than vote for gold. I also understand that this point of view looks and maybe is irrational aversion, but I'd rather do everything I can to promote and encourage the thing that puts the recursive pain train into the grave. Yes, my actions are akin to burning the boats, and although many might not understand my logic here, I have great pride in lighting those boats on fire. Again, I don't mean to direct hatred for gold at any person. I have tons of very close friends that own gold. Instead, my point of view is a result of where I've been, what I've seen, and where I want the world to go next. I tend to agree 100% with Preston here. Gold's inadequacies as money is precisely what got us to the failing experiment that is government-backed fiat money. I see backing gold at this point in the game as a bet on societal and technological regression, while I see a bet on Bitcoin as a bet on societal and technological progression. Put more simply, Bitcoin is hope. So what do you think about Adam Back's bold prediction? What price will Bitcoin have to reach to do the job? Will the real flippening happen this decade? Leave a comment with your thoughts, like this video, and subscribe to the channel for more content like this. Also, check out last week's videos on the tidal wave of capital coming to Bitcoin this cycle, and the one on the legal and regulatory battles against Bitcoin privacy and self-custody. Until next time, Bitcoin is peace.